Hey everybody, morning. Looks like we got a nice crew here in the S&P. Has me very concerned at this point. Very, very concerned. Um, anybody, anybody that I haven't talked to got a guess on what this 37-year pattern might be? Goose coming in from underwater California. Good morning, everybody. If you want to chat on the live stream and make that guess, click on the button over here. Click the subscribe button. Oh, need to move my monster over just a hair. And yeah, got the pineapple this morning. Quite tasty. And good morning, everybody. Looks like Alan, Larry, David, Merle, Arturo, Michael, Alan, Craig, Mark, Marizio, Kevin, Philip, Spinborn, Francois, Jan, Anthony, Rongamer, Goose, Logan, wow, JB, Valerie, Ted, Pal, Donald, Ryan, Keith, Sergio, Shakis, Darren, Cliff, Andreas, Jason, George. Good morning, everybody. Nobody has a guess, huh? Nobody at all? Hey, Pam. Good morning. And Suck Beer. So, guess what? Guess what? Here it is. I'm gonna show it. Let me bring it over and share the screen. Here we go. So basically, this boils down to the S5FI. The S5FI dropping out. This is breadth, basically, the breadth of what's climbing. Has not done this, has not dropped out while we make new all-time highs right up here. New all-time high is the green arrow, while the breadth, red arrow, goes this low. We haven't had this much divergence between the S&P 500 and the number of stocks going higher versus going lower. S5FI, essentially, we haven't had this kind of distance between them since 1987. Right before Black Monday crash thing. This is concerning, to say the least. So, some VIX calls out to April, maybe March, might not be a bad idea. I'm just throwing that out there. That if you're the type of person that likes to have a little bit of protection on, it might not be a bad idea to do that at this point. Now, all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. Just because last time this divergence happened, we got a big crash, doesn't mean that's going to happen again. This presentation is intended to be informational, educational, fun, and entertaining. It is not a recommendation to buy or sell any financial instrument or anything else. All right? Don't buy stuff from gurus. Don't buy stuff from people like me. Don't buy the next financial newsletter that you see an ad for. I guarantee you it's written by a copywriter, not by an actual guru. And if you desire personal financial advice, you need to hire and consult a financial advisor that you trust. Because look, everybody out there is just trying to make some of your money into some of their money. I mean, that's the bottom line, right? So make sure you trust the person and they actually have some sort of vested interest in your personal financial success over just giving you some advice. I mean, any old fool can give you advice, right? So be careful out there. And we'll let me pull up another chart here if I can find it really quickly. And that is not it. Cool. That's not the one I want. Just gotta have to kibosh my breadth indicator real quick. I pulled up a chart and now I can't find it. There it is. There it is. All right. Check it out right here. So S&P seasonality. We tend to, we didn't really get a January chop. Maybe we just went straight for the pop. But typically, March comes back to scratch for the year, if not going negative. And you got to be careful on all this stuff. Let's see. I need another chart. Let's see. Where? There it is. There's my other chart right here. Look at this. March, baby. And we have, VIX has been essentially flat. This is volatility index for the S&P 500, which is VIX. Seasonality over the last 20 years. Both these charts are 20-year history. And typically we see a nice pop in March. and then we relax back down. So we may see this thing peak out coming from this month into next month. Now, we didn't really get this over here, so maybe we just kind of been stalled on VIX so far. I mean, we kind of get a little bump, but not huge. And really, these numbers are like 10%. We may have seen a 10% bump. I mean, at the point it is, that's only like 1.4 points, right? If we come over here, I mean, look at that S5FI yesterday. Look at that thing plummeting. Right, this is what I'm talking about. Watch out. Watch out. To take this off the log chart, I think, to be able to get it back to proportionary. So this has me concerned right now, because this is going down while S&P is hanging out up here. Something's not right. And look at this. VIX is on the floor. Now we did kind of, let's see. Let's measure. From the beginning of the year into the mid-January, 17%. Yeah, right there, 17% pop. It didn't really feel like craziness, but look at a little higher than actual. I mean, not too bad. We're kind of fitting in there. So we could see maybe a 25%, which is not crazy high. I mean, we're talking about 16, 17. Of course, if we get a flash down the market, we may do something like this. Up here to 22. So be careful. I mean, I say it all the time. Be careful. It's your money, you know. Nobody's watching out for you like you. And, you know, I'm just throwing out there the possibilities and potentials. So, anyway, moving on. We have a lot of the Fed members speaking this week. I haven't quite figured out why, what they're going to be, what agenda they're trying to push. We typically see this right after an FOMC meeting when they're trying to adjust the narrative a little bit. We see all these Fed members come out and start speaking publicly, and so we're going to have that continue. There's not really economic news this week. That's mostly next week when we get CPI and PPI. Now, I posted an interesting talk yesterday in my VIP chat. If you watch it, they talk about lots of stuff, and you know, some pretty smart dudes, you know, in investment banking, and they're talking about the fact that inflation typically happens in two big waves. Which, you know, this was one of the things they talked about. They talked about AI and you know, working with Elon and all sorts of stuff like that. But and one of the points they brought home, inflation typically happens in two waves, you know, mainly due to the fact, due to the way that contracts are written in the United States, or, you know, actually worldwide for business. Typically you sign a year-long contract, and that kind of locks you into a price range so that everybody can plan. Now, if costs on something goes out of whack, you're going to have to eat that cost in the short term, but then when you rewrite your contract for the next year, then you can make up for it. And you know, my brother that works for Denso, which supplies auto parts for I think 4 big manufacturers. You know, it's like a Japanese company, and he said he works in the logistics department, and they ate the logistics changes in 2020 and into 2021 when everything went kind of crazy and rates went like, when we had all the ships sitting out off of California and couldn't unload ships and all this stuff. They were eating the cost of that increased rate for freight to move it for their car parts. And you know, they actually, I think he said they spent almost $500 million extra that wasn't planned, that wasn't in the contract, moving their parts between Japan and the United States. And so then the next year when they rewrote the contracts with the when they were time for renewal of the contracts with all the auto parts manufacturers, they took that $500 million loss and wrapped it into the new contract so that they could come out to the good. So what that did was create inflation on all those parts, and then we go through another cycle where that happens, and then that absorbs into it trickles down. So you get the first line suppliers that have to pass these costs down, and then you get the people that actually make the things like the cars, and then they have to adjust their prices, and it's kind of a trickle down ripple effect. And usually it happens in two big waves, is what the guys were talking about during this talk. And I'm going into more detail than they did as to why this actually happens. So I think the narrative around Jerome Powell saying that he wants to hold off on cutting rates is probably smart, because as I've shown in the past, maybe we're just we were in the second act of inflation, and this could last for another, I don't know, year almost. And then, as Goose and I have talked about long before the VIP came around, the VIP group, inflation can rear its head right back up and go ripping again. So, hey, Kimberly's here, and Nikki. Thank you for doing what you did, Nikki, yesterday. Pierre, Peter, Michael, morning, everybody. Kimberly, you rolled over and told me bye, so I was like, okay, I'm just left. Anyway, she was gonna come with me this morning, but she didn't. Anyway, so that's this week on the economic front. Now, are there any catalysts to create a crash? No. And let's actually dive into the S&P back from 1987 and kind of look at this really quickly. We're going to have to zoom out and go to a land far, far away in a time way before I was trading. This was actually back when I was trading in elementary school, or maybe in the middle school. I don't actually remember the crash that well. I remember lots of people have talked about it since then. But look at what we got here. See how we had this epic move up. We had some instability. Kind of get a little flash down, and then so we'd be sitting in if we're drawing parallels between this and now, we'd be sitting here while that S&P 500 breadth is making divergence. And so we could see a little flash down, a little bit of all clear, and then a flush. So timeline for the crash, well, they never happen exactly the same. All right. If we're going to do something like this, if we're going to get another crash like event, we're probably going to get a little bit of signal. Now that was 34% down from that high to that low. If you go from the ultimate high, which is what we might have right now, almost 36%. Now what would that look like today? Well, we'll have to zoom back up, come back up to current times. 36% down. What would that look like? Ooh, this is going to get serious. We did a 36%er. Let's just stop right there. That'd be like going from where we are now to 3,200 in a few days. I mean, sorry, Nikki. I'm still a little young dude. Anyway, I guess I'm becoming what they call middle age, but whatever. I'm still young at heart. I'm still young by a lot of measures, I guess. And so ancient history and market times, though. Ancient history. And we need to be very careful here. Now, I'll try to keep you abreast if we actually develop this kind of situation. This could be one of the things that we experience. A big down that fast could be a huge money making potential. All right. And yeah, it definitely could be a huge money making potential. I made money very fast in the COVID drop, and the COVID drop wasn't nearly that big. We come back over here in 2020 and look at it. This right here dropping out, well, 35%. Look at that. I don't know. I mean, I was able to make, I was able to turn about $200,000 into over 1.4 million. And we could see it again. I'm just throwing that out there. Like, I'm not saying sell everything. I'm not saying go short everything. I'm just saying we need to be very, very aware. If we start getting some instability, this thing could flush down, and we could be looking at something where we go down to 3,200. All right. I'm before, after the right now. It could be after. I mean, we could pop on up. We could make that 5150. I'm just throwing that out there. This is a giant risk in the market right now. That if you're not aware, you can't plan for it. If you are aware, then you can make your preparations, make your plans. So we could be, that crash happened in October. We made the high in August. So we got September, October, 2 months. In the next 2 months, if we're looking at it, making the high now, and remember, they don't always happen the same way. But if it happened in a similar manner, we could be talking about, February, March, or, March, April. I don't know which way it pans out at this point. So what I do know is that need to be very, very careful and cautious about this potential setup we have going right now. And if we keep grinding all-time highs while the S5FI keeps plummeting, this is like the biggest red flag warning out there. Okay, this is the breadth of the market. Stocks above their 50-day moving average. As we grind higher and this goes lower, we're tightening what's going up while everything else is going down. And if the thing's going up, they say the AI 5 at this point. I guess they're kicking Apple and Tesla out of the Magnificent Seven and coming up with the AI 5. And, it's stuff like NVIDIA and AMD and AVGO and TSM and all these things that have kind of been rocking while stuff like Tesla retraces pretty deeply. And I tagged that 180 yesterday finally. I can quit crying on my beer that I missed it by a couple cents. We actually tagged 180, and I had an order to get filled at 175, and of course I missed that by a penny. Also, isn't that my luck? Anybody that's been with me a little while, you see that. If we go put the magnet on there and snap it to that price, look at that, 75.01, and I had my order at 75 even. I mean, talk about dang the luck sometimes. And there goes Tesla retracing back up. So, all right. S&P 500. I'm just super cautious at this point. I thought yesterday we'd get a little flash down. We did, and then we retraced it back up and ended up with an inside day, which is indecision. Could be indicative of making a top, but it also, and every time we get one of these breakout candles, we take it right back. And it's like fake out, take it back, fake out, take it back. Inside again so far today. Inside this candle is what I'm talking about. So we may, there's a healthy chance that we may break out right to 5150. And why that is, well, if we zoom up to the weekly chart, look at this baby. Talked about this yesterday, that I did a special kind of presentation yesterday and talked about my yearly outlook. I mean, look, this thing is 70% likely to tag that 5150. And that's not even that far away. I mean, we're only talking 200 points at this point. That's barely a blip up at this point, 3% versus the potential for that 30+% correction. And the higher we grind without getting any kind of pullback whatsoever, that makes it more and more likely we're going to see that big down flash. Just, I would be, all I did was hype the upside and keep everybody long. I wouldn't be doing the job that you're here to watch. We didn't even hit the monthly back here. Last time we've been to the monthly was back here in 2011. Maybe time may be due to come visit this monthly roadmap line. And if we continue it up a couple months, 3,200, 3,300. I mean, it's not all that crazy. We could come down here and touch this baby. Maybe like, no, it won't do that. You should be more careful. I mean, look, right back here. Last time we went down there, time before that. .com bust. Time before that was way on back here. The 80s. And this one right here didn't even touch it on the monthly. The one at 87. So, but you should keep following. Make sure you're subscribed. Make sure you hit the bell with the notifications so that you stay abreast on the developing situation. I'm not saying there's a crash now. We could rock right on higher. Just keep extending this baby and then flash it. But at some point in time, if we go all the way up here, we could get a bigger down. I'm just throwing that out there. And it could last like this. Could be talking. Yeah, I've talked about this. So, I mean, it's not like this possibility hadn't been on my chart. I mean, I've got this drawn, right? And this wasn't, I didn't draw this yesterday. So if you're lost, just rewind and come back into the conversation. If you pick me up partway through this, you should pull the slider back on the bottom. It's all recorded already on YouTube, and start again. See if you listen. If you still don't get it, come talk to me in Discord. We can clear this up for you. So at this point, concerned. As we grind higher and have smaller and smaller breadth of what's going higher. All right. Seeing lots of volatility in the stocks above the 20-day. That's to be expected. So, yes, just kind of grinding higher in an inside candle so far. NQ pushing higher. And at this point, let's just clean this baby up and draw some fib lines off of this retrace. I gotta turn that magnet off. Drives me crazy. Snaps all sorts of stuff. And so the next fib line up, roughly that 18.5, if we're gonna pop it, and then 19.1 above that. You're like, well, how do you trade that, right? It's just QQQ. You divide those NQ numbers by 41. I'm gonna remove the drawings. Draw a similar. We're talking about 447, possibly 463 on that next upside move. So RTY, this is your Russell 2000, IWM. Still looks like we're heading on down. That would be my primary expectation, that we're heading on down. Either touch the roadmap line or make an echo of this first move down from that 618 resistance. That's basically a measured bounce down. Essentially, for those of you that have taken the fib class and know what I'm talking about, the measured bounce pattern, that's it. A move down, a retrace to the 618, hold, and an echo or extension of the first move. Echo would be the 100. The extension would be 1272, possibly 1618. CL, has found a little bit of support so far. I was speculating that we may see this rally right back up, retest that downtrend of lows before we break on down. And depending on which lows you line this up with, we could be doing that right now. If you go off the candle bodies or if you go off the actual lowest low points, we're kind of coming up into this test zone. May rally just up to the bottom of that box where we've done a lot of consolidating for the last several months. And if we turn down there, it would be a down flush potentially to 65. Now, GC has already done that kind of pattern. We broke down, came back up, retested, pushing lower. This gives me kind of, not really confidence, but gives me the idea that we're probably going to push on down, at least to the roadmap line, if not this target area down here on gold, to just kind of clean this up. Now, we could break on out higher, but so far, that's resistance a couple times now after making that high, and that's lower highs. So we made this high, made a lower high, made a lower high again at that resistance zone. And that's showing that we need some sort of bigger flush. And making a low lower than this low right here, around 1987, that kind of cleans this whole thing up. Sets it where we can go higher again. And that low was made on December 13th. So we need to go lower than the December 13th low. Clean this correction up. This is all corrective, overlapping. Clean that up, and then it cleans up by making a lower low. Kind of flush all that out. Then we can go higher. Potentially. Yeah, I mean, if we just keep breaking down, we have downside targets. But Bitcoin, doing the same sort of pattern here. This has me very, very, very cautious on Bitcoin at this point. The only good thing so far is that we're just consolidating right here. We popped up, pulled back, and we just keep consolidating right there in this little narrow range that could pop out of here. If we break back into the channel, we'll probably rally back up to the top of the channel. Now, as I was speculating yesterday, my big picture view, I think we're probably going to see some FOMO coming into the Bitcoin halving event. That halving event coming up in roughly 72 days, about 10,788 more blocks to go before we get there. If you don't know what halving is, that's cool. Keep following me. I'll probably talk about it more. You can use Google if you want. And I think we're going to see some FOMO into that halving. And then everybody's going to, the attitude is going to be like, well, why didn't it pop? For those that don't really understand how this all works, they're going to be like, and it was the same narrative here. Why did we sell off right after? I thought the ETF approval was going to, be super bullish. And then we get this pullback. I think we're going to have the same effect over here on halving. We're going to see a pullback. That pullback could last us well into the summer. It's typically been 220 to 240 days after the halving before we make a new all-time high on Bitcoin. The new all-time high is going to have to break this 69,000 and change area. So we're looking at mid to late, early to, well, essentially December. We're looking at, 220 to 240 days from the halving would put us in December before we're up here. I think we may see some lackluster performance and some people really getting bummed out. The disparity really picking up into the summer, and then we go skyrocketing off and make a new all-time high. And I was saying yesterday that for people that are only in January options for the halving event, I mean, yeah, that would probably put you in profit. But if you want the bigger move that we're looking at for 150 to possibly 300,000 for the next high, you probably need to be out to 26 at least to capture that move. All right. That's what I got to say about that. Ethereum. Now, interesting here is that there's some speculation that we may see a ETF approved on Ethereum, and we could see prices spike. Now, Ethereum is different than Bitcoin, fundamentally different than Bitcoin. And the biggest reason why is there's no supply cap on Ethereum. And Ethereum is controlled by a few individuals, whereas Bitcoin's controlled by a public consensus committee. Ethereum is not. Ethereum is controlled by people, like a small group of people. And it has no cap on supply. They can just decide to skyrocket the supply, and that would plummet the price. And it's not necessarily smart to do, but it can happen. And right now it's in a deflationary, they're burning more than they're creating. But that doesn't have to hold that way. They can just, with a quick code change, they can change that dynamic very quickly. It's a very fundamental difference between Ethereum and Bitcoin. And the fact that they went off of proof of work to proof of stake, and the price action has been very lackluster since then. So I'm not sure. I'm not sure, one, that we'll see a regulatory approval of a Ethereum spot ETF, and two, I'm not sure that Ethereum is set up in a bullish way at the moment. I'm very cautious on that. So, and interestingly enough, the greed index is creeping up in crypto. Dollar right up into the zone. We're right near that. I drew a big blue arrow there several weeks ago. So that's a major resistance there. If we break through that, we're likely to come up here. If we reject off of that level, probably going down here. So this is a key test area for the dollar index right there, DXY. How do you trade it? Variety of ways, UUP or going into currencies. UUP is an ETF for the dollar. FXY would be the dollar yen specifically. FXE would be dollar euro specifically. FXB is dollar pound specifically. And FXG, I believe it is. Nope, I have that one wrong. I don't remember that one. So there's lots of Forex ones that you can trade without going to the Forex market. And they're actually introducing a yen future. I thought that was interesting. So Lily, look at that ridiculousness. Maybe that should be in the AI5 right there. The GLP-1, the GLP-1 too. So you have Lily and NVO both going a little crazy. And I speculated that once we broke into this channel, we may see NVO rally right up to the top here. Lily, that went exponential, and at some point we're going to get it's going to correct that back out. We don't just go ripping off without either going sideways or correcting it back down. Spot also going ripping off. It's into the resistance zone. That comes from this chop over here. If we can get above that, may set up another retrace some way, somehow. Could potentially get some higher prices. Right now, we're working on some ludicrous levels. We may go right up and test this zone. It'd be the 618. It's like a 1% chance or less that we just pop right up there and test that 300 area. I mean, things are getting a little crazy here. AVGO keeps grinding higher. This is being the AI5, according to some people. SMCI, we could keep grinding. It's like a less than 1% chance that we just shoot right on up there and grind on higher. I mean, that chart, what did they magically do that would value them that many more times? Computer companies are not valued at usually higher than 1 times price to sales. and their PE ratio 45. It's just pretty wild. I mean, look at their revenue versus their COGS. It They have a very low margin, and while their revenue is ramping, they're not going to just print money. They have a very high cost to that to get that revenue. And basically, it's like the video I was sharing yesterday is like, so Taiwan Semi takes 3 tablespoons of sand, silicone, which is mostly sand. They take about 3 tablespoons of sand, turn it into a chip that they then sell to Nvidia for about $700. And it's roughly, these chips are roughly about this big. And then Nvidia turns that around and sells it to Meta, Google, other people, Supermicro, for like $50,000. And then, Supermicro takes those and sells them to other people, third-party people. Whereas Meta and Google, you put them in their data centers, and then they immediately start depreciating. And think about that a second. So TSM taking, pennies worth of sand, essentially turning it into silicone wafers, creating those chips, using their lithography and other processes to create those chips, sell them out to people like Nvidia for like $700, and then they flip it around and sell it to people like Meta for their data centers, Google for their data centers, Amazon for their data centers. Interesting. So these guys we're talking about some technology that's coming up to like upwards of 80% of the time, these chips that get made for AI just sit in the data center, not even being utilized, because while GPUs have increased many, many, many times more power, the rest of the supporting system, the memory, the hard drives, the main processors, that control the bigger system, they've all only increased like 4 times over the last several years. They're about 4 times faster, while NVIDIA GPUs have increased maybe 20x, 30x in their power and capability. So what that does is that lets these GPUs sit there in those data centers and just idle a lot of the time. And you probably see that in your own system. So what value does NVIDIA add in that process? They just package it up into the GPUs and sell it. Their technology, their software is what they're selling. So that's interesting, right? But these guys were also of the opinion that NVIDIA is in the king's seat and somebody could slay the king. Come out of left field and slay the king. They're not in a position with a moat around them as far as their technology goes. And like Google has their own tensor cores that they actually produce, and they're not. While they do buy some NVIDIA GPUs, they also buy their own, manufacture their own tensor processing units, their TPUs. So if you're unfamiliar with that, you can dive deep into some of the stuff. So Google has their own TPUs, stuff like Midjourney, I believe, runs on TPUs instead of NVIDIA GPUs. If you're unfamiliar with Midjourney, that's the thumbnail on the video today, created with Midjourney and a little bit of Photoshop. So that went down a rabbit hole of different information. So what does JT do all day? Keeps up with all this crap. Instead of sports teams and celebrities, I keep up with companies and technologies and things like that. And this one, despite popping, looks pretty much like a watermelon seed squeeze. Getting that wedge formation showing up here. And at some point, we're going to break out. We're going to tighten up and break out on ACGO. Looks like they're construction farm equipment. Well, that looks like a giant dumpster fire. all the makings. Yeah, 1 for 80 split. Yeah, that's definitely a dumpster fire right there. Don't mess with this. Very. See, a little pop, but still looking kind of bearish. I expect that one to flush on down a little bit before we find a bottom. COHR, nice pop there. Right at the prior high. We went well below measured bounce. This is looking overlapping. There's significant resistance there. We break above that, we could go higher, but at this point, not looking super promising. TM breaking out. Upside target 235. Somewhere over here, I would expect. The target at this point. Didn't retrace, didn't make it back to the roadmap line. Rejected the head and shoulders, came up to the resistance, now popping right above on earnings, looks like. Hashtag crushing it. I mean, 235 in the next upside target. Wasn't really tradable for me, but hey. That's the way that's the way the cookie crumbles sometimes. So MDB has that resistance from these prior highs. If we can get up through it, we can start talking about the bigger upside potential. It's just sitting there. We've topped out in this area like once, twice, 3 times, 4 times. Sitting there right now, just trying to grind through it. If we can get above it, great. If we can't, we may be in for another retrace. This is looking like we may be coming near the end of this upswing, and we may need a correction. Meta, right up to the 1272 target. We can grind sideways a little bit. We could retrace, the potential pass at this point, the 4 potential pass. 1, we just pop right on up to the 1618. Path number 2, we go sideways for some period of time, consolidate, and then pop that 1618. Path number 3, we retrace back down to the breakout and then rally up to the 1618. Path number 4, if we retrace and we don't hold that, we may go deeper. All right, everybody clear at this point? This was the highest probability place to go. This is only like 35% likely at this point, 35 to 40, to even reach that without doing this. VRTX, biotech, pharma. I don't like to trade biopharma. I just don't like to trade stuff the FDA is involved in, because it just does crazy stuff sometimes that doesn't follow patterns. And this was kind of very echoey, moving up through here and got a little pop. I would expect one of these retraces and then potentially go again. PDD, almost back to the roadmap line. I would expect it to. We did. Oh man, we came really close yesterday, didn't we? Really close to. We basically didn't quite fill the gap. I kind of expect this to come down in this area at this point. I was expecting either we go sideways until we meet the roadmap line, or we retrace. And retrace we did, and we need just a little bit more flush and set that up to go higher again. Now it can just go higher at this point and rocket on up to the next level. The first indication that would do that would be coming back up above 140. Then we probably be heading up to 160, 170. In fact, I might put a alert there for myself. See if that plays out. NTES coming back up. That if we get a positive green candle up in here today that doesn't just retrace back down, could be setting NTES netties up to go to 128. Remember, I have 30 MA later on tonight. If you're interested in making a request, come visit me. 38 MA, 30 minutes of awesome, comes up at 5 p.m. Eastern. For you time travelers, that's 4 Central, 3 Mountain, 2 Pacific. I don't know the rest of the world. You'd have to use the Google machine to tell you. And VRNS, we're probably getting near the top. NXPI, just kind of chopping in here. Looks like 247 on the next upside if we can break above this right in here. Another semiconductor. Be up there. BIDU keeps chopping around in here. I kind of expect it to come up and test this roadmap line. If we can get above it, we can break out. If we can't, we may continue on down lower. GEHC, just chopping around a little bit. General healthcare, we did the roadmap bounce. 79, 80 upside, and then 82 above that. Not a huge moving potential. PLTR, nice pop. Nope, moving fib lines instead of the chart. Next upside target, 23, 25 above that. So I was very cautious because this would look better with a retrace. If we don't break above the prior high, watch out for that retrace. It could happen violently. FUTU, under the roadmap line, not the most positive, even though it was a mover upper today. This actually has a somewhat bearish pattern and continuation lower than this low, or at least a move down below this low would be kind of the expectation at this point. Now we do have an uptrend of lows cooking. As long as we stay above that, we're going to keep grinding up. FBL, Facebook long, 2x long. That's a leveraged thing. I would be very careful on Facebook long. This that can retrace right back out. Leverage cuts both ways, so if you grab that long, you can, leverage can cut you both ways. Cut you on the downside and the upside. BABA looks like, look at that. Kind of, sort of. Not very proportional on the head and shoulder. Usually it looks better when the shoulder and the shoulder are the same size. And that one may experience a little pop from the head to the neck. The other way, put us right up here, back into that consolidation. Could see that pop up in that area. LI. Looks like it's working back down to the bottom of the box. Speculated over here that we may see it continue down here. About halfway there so far. 19 would be the downside target. Even though we're getting a little pop today, that looks like it's on a path to come down here. UPS needs to get back above that gap. Otherwise, we could be heading down to 125, possibly 115 on UPS. Now, before earnings, I drew that target zone and we came down and hit it. Light. Nice pop up. We've got this resistance, this gap that we're going to have to fill before we can go up higher. CWB just keeps grinding lower. 19, next downside target. EDU. Well, the upside's up there around 100. The downside's down here around 60. 65. HSDT. And when they're just grinding like this, there's not much I can say. I mean, it just, it has done a pullback. Didn't really touch, it's a smaller time frame pullback. It may pop up to 88, possibly 93 on the next extension, then do another pullback, and then, keep grinding up here to this 100 area. HSDT looks pretty much like a dumpster fire. Has the reverse split. down below the roadmap line, looking pretty much dead, not far to zero. ELF beauty, right up to the targets. We could go an extension to 200. At some point, we're probably going to do another retrace. BP, nice pop up to the roadmap line, but that's still pretty bearish looking. That's very overlapping. Doesn't have a final flush out yet. Could be done. I mean, that could have been the lower low right there that we needed to flush this out, but doesn't look very definitive yet. And now decliners, FN, right back to the roadmap line. That's beautiful. That's the kind of thing that can happen. Look, when we get up to those extreme targets, we can make an extreme drop right back down. Now, who expected this to drop 24%, 25%? Anybody? Anybody? Moving back up above 206 can set us up for 246, 267. But that's the kind of thing I'm warning about right there. You don't think something like NVIDIA can do this, but I guarantee you. I mean, I've seen it before. We'll see it again. I mean, look, they crushed it on earnings, but still down 23%. MDGL, another biotech pharma, IT. Looks like it wants to come back to the roadmap line. FMC. Looks like we may want to push lower. Next downtown side, maybe 32. SYM, getting a retrace back to the roadmap line. As long as we hold this area, still looking up. I am in a few shares. And we just retraced the gap. That gap right there. Basically retrace the gap. As long as we hold there, positive. If we start breaking down, the line in the sand is down here at 30, these prior lows. We don't want to get below that. Otherwise, we could head on down. If we head on down, that would be something like this area around 23 would be the target down here. If we get below that prior low, that's just an echo move off that. And if we had an extension, like that's just the 100% right there. You see the 100%. If we got the extension 15, possibly, ouch, $4. That'd be like going out of business. Fire sale. RMBS, right back to the roadmap line. Another semiconductor. So not all semiconductors rocking it, obviously. That is an echo, basically. And the next extension probably take us up to 81, possibly 88. FI. That one also may be on a retrace here. You see the last time we gapped down and kind of kept going. May see that again. KRTX. Ridiculous biotech pharma. Tesla keeps grinding down there in the target zone. Hunting the bottom. Was that the final flush out? Quite possibly. We can see this. The next upside target I expect is the roadmap line. Go back up and test. You know, we do have the gap down we got to get through. That proved to be resistance already. Lower low. If we can get up through it, we start looking at the roadmap line. We get up above that. We have the downtrend line. Get up above that. We could be talking about the upside targets like 350, 400, 500, stuff like that. One step at a time. Don't get ahead of yourself. AKRO, I'm in shares because how long? There's no telling. All right. Can you make money in the short term with options? Sure. Do I like doing that? No. That's not the game I'm in. I'm in more of a longer term, less decisions mind frame when I'm trading. It's usually the way I like to do it. I have a few things that I do that are shorter term, but usually I like to make fewer decisions. That leaves less opportunities to fork it right up when you mess up. Checkpoint right up to ridiculous levels. We may see that retrace. Doc U. Oh, right back down. I thought we would do that. Almost to the low. Look at that. Sometimes I get lucky. Look at that. Almost perfectly. Right there. We turn up from here, we can go much higher. This is actually really good. Really, really good. Let's draw some stuff here. This has my attention. As a few people have said, when JT stops and his attention is on something, I'm going to put an alert above the roadmap line. So this could be a measured bounce, like a potential measured bounce. We could be looking at 83, possibly 92 if this turns bullish. Here's your opportunity right here. How long? You should either buy shares or something out a ways if you're going to play this. I may go into it with a synthetic position if I can afford it, since IV seems to be kind of low. That looks pretty good, and I may wait for that 54 area. Really fascinated right now. And there is significant resistance right up here at 65. ETNB, another biotech pharma, medtech. AMD, getting a little lightning, a little bit of retrace. This is starting to look like that. Remember that 1987 chart we started out with? Looking right here. It's starting to look like potentially making the top, and we could see a flush on AMD. MVT. We are seeing 67 will be my upside expectation. Then we may see that retrace. All right, that's the list for today. Remember, 30 May later on this evening. If you want to come see me, if anything I said was helpful, make sure you give me a like and hit the subscribe button. Make sure you hit the bell with the notifications so you get notified when I go live later at 5 p.m. Eastern. And I take your request for at least 30 minutes. And if you don't show up, I can't take your request. So you need to be there so we can do it live. All right. Thanks everybody for coming. I'll be in Discord the rest of the day. And